quarter previous year, and PBIT was at 36 crores as against 44 in the corresponding quarter previous year. Mobility, the revenue for the quarter was at 181 compared with 187 in the corresponding quarter previous year, and PBIT was at 2 crores, which is in line with the corresponding quarter in the previous year. Revenue for the quarter for other businesses was at 247 compared to 178 crores in the corresponding quarter, and PBIT for the quarter was at 15 as against 16 in the corresponding quarter in the previous year. At the consolidated level, TI's consolidated revenue for the quarter was at 4,434 crores as against 3,767 crores in the corresponding quarter, and the profit for the quarter was at 464 crores as against 396 crores in the corresponding quarter in the previous year. CG Power, in which the company has a 58% stake, registered a consolidated revenue of 2,228 crores as against 1,874 crores in the same quarter previous year, and PBT was at 336 as against 263. Shanti Gears is registered a revenue of 139 crores as against 121 and a profit of 29 as against 24. So Mudit, I'll stop with that and we'll be happy to turn it over to the audience for questions. Good morning. We'll take questions from the audience. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of CA Garvit Goyal from Invest Analyticals Advisory LLP. Please go ahead.
Hello, am I audible?
Yes.
Good morning, sir. I have 3 questions. First one is on the traditional businesses. So, despite manufacturing activities are at their historical peak in India, if we look at the growth in our engineering, power, metal form products, gear segment and the industrial segment, we find that except power segment, other segments are growing merely at a single digit. So, I am not able to understand why the environment is so strong and we have the internal capabilities in the products we deliver, why the growth number is too low for us. And if it is because of the high base, then what are the new initiatives are we doing in these areas to increase our growth trajectory? Because even if I take our railway initiative, we should be doing tremendously well looking at the overall industry. So kindly put some color on it, sir.
So are you talking about, when you talk about power, are you saying you're talking at a consolidated level? Are you including CG in this discussion, or you're talking about TI?
About consolidated numbers, sir.
Consolidated, okay. Yeah, so I think so go ahead with your perspective on engineering and then I'll give a broader perspective.
So if we see TI standalone perspective, basically we seen the Q1 passenger vehicle and commercial vehicle, both there was a slowdown, whereas two-wheeler, maybe there was a revival back in the Q1. So if you see across the businesses in standalone, our performance is maybe equal or better than the market in terms of volume as well as the sales value. However, in maybe let's say particularly in MFPD, there was some mix issue, which is 1 or 2 quarter issue, which will get improved. But overall, there is a performance is in line with the market or better than market. Coming to giving a color on maybe let's say what are the growth verticals still available, exports is definitely opportunity. And EV, when it is picking it up, it is opening up a new areas of high strength metal and all these things, and which we are at development stage and be participating accordingly in that.
And so what about the railway initiative? Like railway industry is doing really well. So where are we standing in this value chain?
So railways definitely, and I think that is railways obviously is under CG. So when we look at that, the larger part of railways is under CG. And that business is definitely picking up and growing at a good pace. In segmental data, we don't split out railways. It is part of industrial systems. But I do see good growth in that business in the upcoming quarters.
And so overall growth, like across our engineering metal form segments, do we looking for any kind of double-digit growth going ahead? Like, or it will be like this single-digit number only because of high base?
We are looking for double-digit growth.
Understood, sir. Secondly, on the electric mobility, so we were about to launch a large commercial vehicle in the month of July and August, and some electric tractor also in October. So, what is the update on these products, and how our electric three-wheeler is getting traction in North area, and what are the number of dealers we have right now for electric three-wheelers, sir?
I'll go segment by segment. On the three-wheeler piece, I think we are proceeding reasonably well. We have a good market share in South, and we are making inroads in North now with, getting centered around the larger markets. And we are garnering around 4 to 5% market share in North now, and we want to take it up in the coming months and the coming quarters. So that's as far as North is concerned, but the customers have received it well. There's a lot of work that we are doing on the ground to initiate the demand. As far as South is concerned, we are going steady there with the three-wheeler business. In terms of the heavy commercial vehicle, we currently have one product, which is the 55-ton 6x4, and around September, October, we should be launching the second variant in this segment. Which will give us which will help us to take about 20% of this TIV with these two products, and gradually then we'll be launching the other products in the third and fourth quarter. And we are making good progress with the customers there, and slowly inching up on our sales as far as that's concerned. So this broadly the answer to your questions now.
Number of dealers for electric three-wheelers?
Number of dealers for electric three-wheelers, currently we have 70 numbers, and we are in a ramp-up phase now, and we should be having around 150 dealers by the end of this year, pan-India.
Understood, sir. And sir, lastly, on our new initiatives like lens business and medical devices. So we acquired the businesses to save time for licensing and all, and we were looking to focus on more towards the growth, right? But till now, we are not seeing anything material happening from these segments. So why are we not very much aggressive in the terms of growth for these new businesses, provided we are having the internal capabilities and there are no such hindrances with regard to licenses?
So medical business, particularly on the revenue side, there is a good growth even in the current quarter compared to the previous quarter, and business is doing pretty well. At the same time, we are investing in the new product development as well as in the sales side of the story. And this is about the future business, what we are doing it currently. And we have already announced we'll be putting a greenfield plant in the Noida for, again, medical consumables. So we are bullish about this business going forward, and it will have a good growth. Coming to the numbers, what you are able to see, because of the goodwill amortization, you are not able to see those numbers. And because we are investing in the new product development, that's a difference in the bottom line. Otherwise, revenues are in the very much on growth sides.
So why we are amortizing the goodwill? Like earlier we paid higher for the acquisition, and now we are amortizing the goodwill. So what is the exact reason for it?
Hey, my suggestion is that that we have two questions, and then you can come back in queue, because otherwise it'll be tough, and I don't know if the moderator can just kind of manage this somehow. Okay, but let's answer your question on goodwill, and then
this actually, no, it is not goodwill, it's intangible assets, whatever we have done. That we have to, as per the Ind AS, we have to amortize over the period of time, useful life of it. Say almost around next 5 years, we'll be having this amortization. It is approximately 4 crores per quarter will be there. It's an intangible assets.
Okay, sir. Thank you very much, sir. I'll join back the queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participants. Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi. Good morning. A couple of questions from my side. One is on the core business. Can you talk about how exports are trending up now? Are we seeing full normalcy in exports, and what kind of a growth we are seeing, and what would be the level of exports in standalone business?
So good morning, Mr. Gandhi. On the export side, we are doing about 19% of the revenues are coming from the exports currently, and there is a little challenge on the freight side of the maybe whatever this Red Sea the numbers are happening. Otherwise, maybe the exports is on will CPI.
19 is for the engineering
division, and
for the core business. Okay.
So
19 is for the engineering business. 19 overall is at 14.6%.
Okay, 14.6. Okay. And secondly, when I look at our other segment revenue, it has been going up reasonably well. I believe this would be largely industrial chain. Has the greenfield plant started operations there, or that will be over and above what we are doing today?
So greenfield plant has started already, which is in operation from last 6 months' time, and we are running that plant fully as of now. But whatever maybe momentum you see, that is also coming because of the TMT, which is a trading business we are doing it, that is also leading to this growth.
Got it. A few more questions. I'll come back in here.
Thanks, Jinesh.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aman Soni from Invest Analyticals Advisory LLP. Please go ahead. Mr. Aman, your line has been unmuted. Please go ahead with your question. Mr. Aman, your line has been unmuted. Please go ahead with your question. Due to no response from the current participants, we are going ahead with the next participants, which is from the Rishabh Shah from RBSA Investment Managers. Please go ahead.
Hello. Yeah, hi, morning. I just want to understand what is your aspirational market share across the EV portfolio in the medium to long term?
So obviously kind of that will change by segment, right? I mean, I think the broad statement we made is that, that we want to be, ideally in kind of at least 2 to 3 segments, we want to be in the top 2 players, right? So kind of the way we see the energy transition working is that we see that the top players will likely get redefined, and, as more and more of the market moves to EV, we see ourselves being one of the top 2 players on the EV side of the business. As that kind of gains share, obviously we'll want to maintain that share as it expands, right? The EV share as it expands. So in all of the businesses, that's our aspiration. So we will see how that plays out over time, but definitely that's our aspiration going into each of the businesses. Which means that the way to think about it is like we would aspire to at least like a 20 to 25% market share in each of the segments that we're in.
Okay. And secondly, in the heavy commercial vehicle front, what are the levers to say reduce the overall manufacturing cost, the next 1 to 2 years without the benefit of higher volumes, and how much can it come down by?
Yeah, so we think that costs can move down by significantly over the next 1 to 2 years. The big drivers of movement obviously are going to be first to indigenize a lot more, right? Because a lot of the supply chain still doesn't exist in India, and we have to develop the supply chain in India. That's an effort that is fairly strong, and we're basically very focused on indigenizing the supply chain. The second part of it is going to be that where we buy some outsourced components, especially on the electronics and the control units, over time we will have to develop our own capability on the control units and basically that will help reduce the cost significantly as well. And then the third part, obviously, is that we're going to start packing our own batteries. And in LFP, as you know, cell prices have also begun to come down. So I think that those three combined is going to help. And then fourth is obviously kind of over time on the mechanical components. As we get some scale, we will get more leverage in order to be able to reduce price. So given those four different areas, we definitely do think that there'll be an opportunity to bring prices down over time.
So with all these initiatives that we just spoken about, the cost can come down by more than 15% at least?
Yes, we don't want to guide on what costs will come down by, but obviously kind of the targets have to be significant.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohit from Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yeah.
Hi, thanks for the opportunity and congrats for good set of numbers. Sir, I would want to know more about this medical devices greenfield project that you are speaking about. What are you going to do there, and when you expect to manufacture some product from your greenfield project in Noida? If you can provide some color on that. And timelines as well.
Yeah, so we are in the process of doing land acquisition as of now, and it will take about 1 year time to go for commercial production. And we will be investing in the area of medical consumables only, because that is the field we have chosen for TI Medical as of now. And it is expected to start commercial production by Q2 of next year.
Okay. And what about the electronic side of your business, the lens and stuff? So have you enhanced or expanded your portfolio now, or you are still at the same stage where you did that acquisition on the lens side? So what is your strategic intention there?
So as of now, maybe let's say we are in the same process of where maybe we were working with the customers for the lens, particularly approval process, and our sample got approved, and we are in the phase of how to do ramp up. But it is too early to say that because entire material will be for export purposes. As of now, we are working, but we agree progress is a bit slow on that.
Great. Okay, that's it from my side. Thanks.
Thank you.
Thank you. The next follow-up question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi. Can you talk about the e-mobility business? We have seen a good ramp-up in revenues in 1Q. I believe this is largely led by e-3-wheelers. So what kind of volumes are we doing here, and how it should scale up over next 9 months of this financial year?
Yeah, so Dinesh, you're right. So kind of three-wheelers being the larger contributor, and then the second contributor obviously is coming from IPL. So if you look at it, kind of I would say right now we're about 2/3 three-wheeler and 1/3 from the heavy truck is what the first quarter was. We do expect numbers to basically increase over the next few quarters significantly. So that's where I do believe we will see the largest ramp. We don't think we want to guide specifically now, but we definitely see opportunity to increase those numbers over the next couple of quarters. So three-wheeler definitely, I mean, one of the things with three-wheeler obviously is that it's a bit dependent on what's going to happen with this EMPS scheme and whether FAME 3 will get announced. The truck, as you know, we sell without subsidy. And so I think the good news on the truck is that we have seen customers put in orders, we got our first order for 50 trucks, and that was a customer that had bought. So basically, customers are beginning to buy at scale, right? And so that's the basic shift. But I think that as that ramps, and that's ramping up without subsidy, that contribution will also become more significant in our mix. The third product that will likely contribute in the fourth quarter will be the small commercial vehicle.
Right. And would it be possible to share volumes of e-3-wheelers and e-trucks for the first quarter?
So my sense is that we'll start sharing volumes by the fourth quarter, right? I don't think we want to share volumes before that. Around that time, we'll start sharing volumes.
Okay. Got it. And second question pertains to the metal form business. So we have seen a relatively muted revenue there, but considering there are multiple subsegments within that, would it be possible to talk about how some of the key businesses within metal form are doing? Are there material divergences in terms of growth trajectory in some of the subsegments within metal form?
So, Mr. Gandhi, metal form division is dependent on the four-wheeler, which was a bit muted in the first quarter. So we feel that's a temporary issue. And on the margin side, railway margins are under pressure because of the tender business, where we are participating very, very selectively. So we feel these issues are temporary, or maybe one or two times, maybe in a quarter or so, it would get resolved.
Okay, so overall performance across subsegments were relatively in the sense in that 3-4% kind of a range growth.
No, we should be able to do it here also, like earlier we told about double-digit growth. So because of the four-wheeler slowdown in the commercial vehicle as well as the PV, that's why Q1 was a little lower.
Sure. What I meant is for the first quarter, most of the subsegments were in similar trajectory, 3-4% kind of a growth.
Yes.
There are no divergences in performance.
Yes, that's right.
Got it. And last clarification on the e-truck business. You talked about starting to take orders, first order of 50 trucks. So here we will be building up order book and supplies will start happening gradually, or now we have manufacturing capacity which is ready to deliver as orders start coming in?
We have manufacturing capacity definitely for any orders that we get. So the thing right now is that so I would say yes, we are not manufacturing capacity constrained in that business.
Got it. Cool. I'll come back in.
Just to give you a sense, there is a slight lag sometimes due to supply chain, right? Like I said, quite a few of the components have come from China. So it's not a manufacturing capacity, but sometimes supply chain can cause a little bit of a lag.
Yeah, that is understandable. And lastly, sorry, I'll just take this opportunity for last question. The cycle business seems to have started to stabilize. Anything to call out there? Is the decline now largely behind us, given the base is also low, or the growth which we are seeing sequentially is more to do with ramp up in exports?
So Jignesh, maybe your observation is right. Maybe first was how to contain losses, and which has been done. And we are working on the exports and e-bike, which are the growth possibilities in this business, which is a work in progress, I will say, and too early to comment on that because exports happens with little longer cycle, and that's a work in progress.
Okay, but domestic has stabilized, or there we are still seeing decline?
Yes, we can say that downside is stabilized.
Got it. Great. Thanks and all the best.
Thanks, Dinesh.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Mudit Bhandari from IIFL Securities Limited. Please go ahead.
Yeah, hi, thank you. So my first question regarding Lotus Surgical. So whether we have received the approval for export, particularly to Europe, and whether we have started exporting or any timelines for the same?
So, like I stated earlier, maybe we have started that export process, and there are one or two countries where we already started doing exports, and a few countries we are in the process of getting approvals. So you will see momentum in another 1 or 2 quarters across exports in the Lotus Surgical business.
Okay, got it. And whether this large within metal forms division, so we plan to commission large diameter tubes capacity around mid FY25. So what will be the capacity utilization after this is commissioned? As far as I remember, in previous call it was around 85% or so.
So Mudit, just to give you a sense, large diameter is not in metal form. That's in the engineering division. But go ahead with the answer.
So this capacity maybe expansion, like we said that maybe in H2 it will get materialized, and part of that capacity is already up and running. And as of now, we can say that after this expansion, capacity utilization will be good enough to take care of next 2 years' demand. And maybe earlier it was like you said that it was 85 to 90%, and after this expansion it will come down to 70, which will take another 1 or 2 years to come back to those numbers of around 85 to 90.
Okay, got it. And last one from mobility business. So it has seen some traction, particularly in this quarter, both within revenues and EBIT. So any particular thing, or this will be incrementally positive from here onwards?
No, generally maybe you see that Q1 is always a seasonal business for mobility, and that's why you see momentum. We participated that. And like we said earlier, maybe let's say we are working on the exports and new line of business in this area, which is a work in progress.
Okay, got it. Thank you.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thank you so much for the opportunity. So just few questions. First is on the commercial vehicle part of it. You mentioned that you are... Hello? Am I audible? Hello?
Yeah, we can hear you.
Yeah. So in terms of commercial vehicle, you've got some repeat orders. So you mentioned that you've got large orders. So those are like kind of repeat orders, and you are very satisfied with the performance of the vehicle. How should we look at it as far as the commercial vehicle part is concerned, sir?
Yeah, so there have been repeat orders, and so that is the encouraging part in that business. And yes, it has been because vehicle performance has gotten the customers satisfied enough that they are willing to buy more and scale business. So I think definitely what we see is that there's a whole process initially in the sales cycle where customers take between 3 and 5 vehicles, and they basically try those vehicles. So first we go give them a trial, then they take between 3 and 5 vehicles and run those vehicles for a while. Then the next process is this process of scaling. So that's why we're quite encouraged by the fact that the first customer has basically put in a large order, and we started delivering against that as well.
Okay. So your first line of hurdle you've kind of overcome with certain proportion of clients. You need to now extend it to a larger proportion. That's the way to look at this piece of the business.
Absolutely. So I think 2 things now. We'll have to keep seeding the 3 to 5 in more and more customers. So it's building the funnel, right? So think of it as 3 stages. First is they take trials. Then the second is they buy 3 to 5. And the third is that they expand. So the encouraging thing is that now we're seeing people go to that third phase. And that's quite encouraging for us, right? So obviously we're continuing to do both, right? We need to get a lot more in the 3 to 5 category as well, right? Because that's what will convert later.
Absolutely. And on the supply side, you will also have to create that ecosystem around, so that if that 3 to 5 conversion happens to a 40-50, you are able to also supply that. That is something you'll have to also work on.
So that's the biggest thing, right? So that's why I'm saying on the supply chain side, like I said, there are 3 or 4 initiatives. One is, which is to begin to indigenize components that are basically, currently not made in the country. Because if we have vendors around us, that's obviously kind of reducing our lead times in the supply chain. The second is what we'll call design-ins, right? Which is we want to start designing some of these components. That's a bit longer term, right? But I think and then third, like I said, like with battery, setting up our own packing plant, then, and that's getting set up in Manesar, and that's co-located with the factory, with the assembly line as well. So all of these things will then start reducing our supply chain lead times, right?
Got it. Thanks. So the other thing is, also if you just broadly see your engineering capabilities are very, very credible. And what we are seeing along the country is because of multiple things, because of China plus one, there is a lot of opportunity which is coming on the engineering part of it. So are there new sectors which are also opening up for you? Anything more from a 3 to 5 year period? Because exports is something that you have built around in the last 5 years. But even from the domestic perspective, you think are there opportunities into various sectors that are coming up for you on the engineering side?
So it's broadly an area that we continue to explore, and I think that if anything do materialize, obviously it's things that we will kind of bring to you. But broadly, we're in agreement with that thesis, right? That there's a lot of opportunity. What we want to stay focused on are businesses that are going to be much more growth oriented in India, right? And then being able to use that Indian base to, once you've established a base in India, being able to kind of take that product to more global clients, right? And so some of these are capability sets that already exist. But when you look at this China plus one view, we're also continuing to look at things that may not exist in India, right? In terms of capability sets. And then saying, how do we leverage those? Because I think that is what's going to offer more growth opportunity and be more protected for a longer period of time. Okay. I don't know that. Hopefully that answers your question. And just going back to your earlier point on the heavy trucks, the encouraging thing is that it's not just kind of the vehicle performance, but basically it's the economics as well, right? Which is the customers that have begun to deploy have basically begun to see at least a 10 to 15% reduction in overall logistics costs, right? And so in some industries, that's a very significant number, right? So when you begin to look at the cement industry, the steel industry, which is where kind of, quite a few of our initial customers are. So the 50 truck order was from a steel customer. But now we're seeing progress in the cement side as well. And when you start getting to 10 to 15% plus reductions in logistics costs for that segment, that's a huge number, right? And kind of it moves the needle significantly for them. So that's where we're seeing a lot of interest, and basically, and therefore we're seeing that beginning to play out significantly as well.
Great, sir. Sir, I have one last question. Is it okay if I go ahead?
Yeah, please.
Yeah. Sir, on the railways part of it, in terms of your capability, both as Tube and as a group is fairly high now with CG Power. And we are seeing a lot of traction in terms of the increase in railway capex and other things. Some of the performance has been muted. We've been speaking about a lot of tenders coming out, but that has not kind of gotten reflected. How should we look at this piece over the next 3 to 5 years, sir?
So on the CG side is definitely going to start scaling, right? The thing that we've announced there publicly is that we bought a majority in a company called Gg-Tronics, okay? And there that basically gives us opportunities to participate in coverage. You're probably familiar with this train collision avoidance system. That's going to be one of the larger areas of focus for the railways in the coming years. And those tenders will start coming out. So what takes time to ramp obviously is that you go through a tender process. So those tenders will likely start coming out in the October time frame, which means some implementation will start this financial year itself, is the general sense that I get. But there, I think what we're also doing is bulking up significantly on our engineering capability. So what we'll start seeing is that as Train 80, Vande Bharat basically starts picking up and ramping, which I think is going to start happening, towards the end of this year and then kind of next year. Between that, and kind of coverage and the regular business on both traction and propulsion, I think we will start seeing those numbers increase towards the second half of this year and then into next year. And I definitely see in the 3 to 5 year period that is going to be a huge growth area for us.
Great, sir. Thank you so much for answering and wish you all the best. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to two per participant. I repeat, please limit your questions to two per participant. Thank you. The next question is from the line of Ajok from Sundaram Mutual Funds. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is on the core businesses, which is engineering and metal form. We aspire to grow double digit. So what gives us that confidence, sir? Like, can you tie it up with the base industry growth, let's say, assuming a CV and a PV softness? So from that angle, how are we thinking about this double digit growth?
So basically, growth will be driver of 2-3 functions. One is you see the construction industry and the non-auto is really there's a good growth happening in the country. We wish to participate that. That is number one. Coming to number two, when in EV particularly battery weight and all those things is becoming very, very heavy, and there is a huge pressure on the OEMs to reduce the weight of those components, where we have a good metallurgical as well as engineering strength. We want to participate. That is the second. And third will be exports. Maybe if you see at a global level, we hardly have any market share, and whatever we enjoy, good market share in our metal form as well as tubes. Same thing can be leveraged at the global markets.
Got it, sir. And sir, if you just give color on how much is the proportion of CV in metal form right now?
CV, we don't maybe measure it internally as.
No, but you're saying CV, is it?
CV.
Commercial.
Relatively small, right?
It's very, very small.
It'll probably be less than 5%. No?
No, I mean, I am just coming from the earlier answer where CVs kind of slowed down and that impacted metal form growth for the quarter.
It's a TV.
Okay. So how much is that right now for us?
It will be around almost 50% of the business.
Okay, understood, sir. Those were my two questions. Thank you.
Thank you. The next question is from the line of Sundar from Avendus Spark. Please go ahead.
Good morning, sir. Thanks for the opportunity. My question is slightly broad-based here. It is largely about what is the game plan that we have for TI2 and TI3 initiatives. I know a lot of these initiatives have taken a kind of a back step in the last about 12 to 18 months, and the things are consolidating. So where are we in that process, and which segment should we look forward to in terms of a TI2 or a TI3 exploration?
Yeah, so if you think of it, in terms of focus areas, right? Like I've always said, with TI2, they'll have a different kind of rate of burn, right? See, TI3 is kind of a bit of a binary answer, right? Which is, it kind of really depends on whether a market opportunity, offers itself up. And what I usually see is in markets like this, where everything is kind of very richly valued, there's not a huge opportunity for value buys, right? And like with TI3, we're very focused on value buys. So I don't see this environment offering up kind of those opportunities. If there is a slightly distressed deal that comes up, then we will look at it. But obviously, I don't see this as the environment for that. If you take TI2, right, kind of clearly our number one bet, our largest bet has been on electric vehicle. That will continue to be the one area that I do think, you'll slowly begin to see kind of, a scale develop. It will take, over the next 18 months, I definitely do see some scale beginning to develop in that area. Right? So if you were to look at kind of, so TI2 is the area that we might kind of add, one more segment. I think the segments in which we've invested in any significant scale have been, it'll be medical devices and CDMO, right? So medical devices, like Mukesh mentioned, we're beginning to witness at least like 25% organic growth, on what we've acquired, and I would actually say it's tending even more towards like a 30% number. So the good thing there is kind of an acquisition path will continue, and we're seeing at least 25 to 30% organic growth, and there we're adding one greenfield unit. So that's the plan for TI medical devices. CDMO 3xper. Like it's a business that takes a long time to build, right? And that's why I don't like kind of providing any guidance on that business, because honestly, that business is something that we're saying we're totally comfortable even if it takes 5 or 6 years to kind of build, right? While there will be kind of pressure and focus on the team on near-term performance, it's not something that basically I think will contribute materially to those numbers in the early days, right? But I feel very comfortable with the way that business is scaling out. Where we have had challenges have been on kind of the whole electronics area, between kind of lens and camera modules, where we are basically seeing that the supply chain is significantly controlled by China. And the ability to kind of break into this into the Chinese supply chain, I think, is something that honestly we are kind of struggling to do, right? And so that's one area where I would say kind of so as far as we're concerned, kind of the jury is still out. We continue to put significant efforts towards that business, but that's the challenge we're finding there. And as far as TI2 is concerned, in terms of new areas, it's something that we are continuing to explore. We have identified one area in which we will take some action, which we think is a good growth segment again for the long term. And again, our approach in that segment will again be acquisitive to start with, and then building up a base in that segment. So I think with these 4 segments, one of which is jury. So it's basically 4 plus 1, and one of which the jury is still out on as to whether we can scale well in that business or not. I don't know if that gives you a good...
No, very, very detailed one, and probably what I wanted. Just one other point to add to this is that in terms of capital allocation. So out of the cash flows that we're going to generate out of the standalone business, are we going to invest more in terms of TICMPL? Would the cash in books 3,000 crores that we've raised, would it be sufficient enough? Or where are we looking to put that money? Are we going to invest further in terms of Lotus or 3xper? So what's the thought process in terms of capital allocation from there on, sir?
Absolutely, right? So that's a great question. So you just think about this, right? So kind of that's why I articulated the segments as I did. So the first thing is that we've taken any capital needs of TICMPL off the table, right? So just to give you a sense, in TI Clean Mobility, so now, just give me 1 second. So basically we've raised a total of 3,000 crores, of which kind of over half of it is still in the bank, right? After all the factories are built out, and so that is the largest part of the capex is factory build out and tooling, right? And the second, and so after all the factories are built out, we will still have a significant amount of that portion in the bank, right? So kind of in excess of 1,000 crores, more likely 1,100 plus crores in the bank after everything is built out, right? So that gives us significant runway in that business. And so as we foresee it, we will not need more capital from TI's free cash flow in the TI Clean Mobility business. The only reason we might invest is if kind of the business is just kind of growing brilliantly and we basically see, an opportunity to scale much faster. But for this set of growth, TI Clean Mobility is adequately capitalized, right? So capital allocation then, like I said, the jury is still out on this electronics business. So whilst that's the phase, we're not going to kind of allocate right now large slots of capital to it till it's able to prove itself out. So capital allocation is going to go. 3xper's capital is known. It's a slower burn in the early days. It'll likely consume about 100 to 150 crores, 100 crores a year in the early days, and then kind of scale up, because even there, once we build out the pilot plant, kind of and the full commercial plant, that capital allocation is known. So majority of capital allocation will go towards TI Medical and any new sectors that we identify, of which we've identified one right now. Honestly, I think with this one sector we've identified, we will probably hold and not add any sectors after that, unless we find again something that is like an incredibly good opportunity. So that should give you a sense on the capital allocation side as to where it's going to get allocated. Because now the focus is to take these, if we have 4 good segments that we can scale, I think that in itself is a good thing. That's the way I look at it.
Thank you, sir. Just last one to add. Should I presume that the new opportunity that we're looking at will be much larger in terms of investment size when compared to what we've done on Medical OP Expo?
Each of them has the potential to grow larger, right? But like I said, kind of the way we see kind of getting into it is first you got to get to that, got to prove the scale, right? So now is the comfort going up with medical devices? I mean, it's only because we're seeing the capability to grow the business organically. Once we make an inorganic move, we have to be able to grow the business organically at least at that 25 to 30% growth rate, right? Otherwise, it's not worth it, right? So we need to basically look at it from that perspective and say that first let the business prove itself, right? But all the businesses we're looking at, right, whether you talk about CDMO, whether you talk about medical devices, whether you talk about EV, or whether you talk about the new segment we're looking at, all of them are businesses that can consume large slugs of capital. What gives us the confidence to consume that large slug of capital is first being able to see that we can deliver on what we do inorganically, right? So we don't want to go and double down on it before we feel that level of confidence internally.
Perfect, sir. Thank you and all the best, sir.
Yeah, thank you.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, as we scale our electric business, which is showing very promising results, so what type of EBITDA losses we should expect in the initial phase as we scale the business?
Sorry, sir, I don't think we heard what business you were talking about. EV.
Electric vehicles business.
Yeah, so EV, we don't want to guide on kind of EBITDA level guidance at this point in time, right? Because there's different kind of sets of this thing. Obviously, the one thing that we're very focused on, and you can see this, right? Yeah, the thing we're focused on is that we will be very efficient with our capital, right? Our intent is not to kind of burn up. And the reason why we're saying that is you can see how far we are taking just the capital we've raised itself, right? We've built out four factories, launching 4 products. Product development is done. Acquisitions where they need to have been done are done. So we're going to be very conscious from a capital allocation perspective. And at this stage, I'm fairly confident that just with this, we should be able to reach, just with the cash in hand, we will be able to reach positive EBITDA levels.
Hello, Vipul Kumar, are you there? Due to no response, we'll go ahead with our next question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah. Thank you. I think the broad commentary is, especially in electric vehicles and some of the new segments. Electric vehicles will continue to be quite bullish, and I think your comments are kind of well taken. We'll take that in input as we go forward. Thank you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.